Today is Sunday, June 18. Market is closed. And so we will be analyzing the unusual options activity detected on the last trading day, Friday, June 16 for Netflix. As you can see, since May 1st, Netflix has been on quite a bull run all the way up and made a high at 448.65 on that Thursday last week, 41%. And on Friday, it had come down 3%. And so this is quite significant. Does this mean that Netflix will be pulling back down? Or will this bull run continue? So without further ado, let's take a look at these unusual options. So when we take a look at this, the largest orders on June 16, you can see that this 4,400 were done at the 320 strike puts and the 320 strike calls. However, we don't think this is actually that meaningful. We think that this 600 order trade is a lot more significant. And the reason being that when we take a look at the 320 strikes on the options chain, this is July 21, expires 33 days away. You can see here that the 320s are right here. And you can see that the open interest was 8,353. Same on the put side here, 8,765. So we believe that because this open interest is a lot greater than the 4,400, that this trade was a closing order, okay? And so this is not as significant as this 600 quantity options trade here, because this one at the 440 strike calls and 440 strike puts, where they are selling the puts and buying the calls, is an opening order. And this is a bit more meaningful to us. You'll see here that the 440s at the open interest here is only 230. So this is less than that 600, right? So we think that this 440 was being opened, okay? And even though the call side here is less, we still think this is an opening order. And what we think they're doing is they're selling the 440s puts and buying the 440 calls. And when you analyze this trade, you can see that this is a bullish synthetic trade, right? As the price of Netflix goes up on the x-axis here, this becomes a profitable trade. If it goes down, this becomes a losing trade, because anything that is below this zero line is a loss. Anything above is profit on the y-axis here. You can see also the Greek, this is 100 delta. So this is very similar to owning 100 shares of stock, which would give you also 100 delta. And so when they sold these 440 strike puts, essentially this trade has a naked put here, right? So that means that the buying power that they needed to do this trade was basically 440 times 100, since they're willing to own 100 shares at 440 strike price by selling that put, this cash secured put, right? So that's 44,000 per trade. And we know that they did 600 of these, right? So what is that? That's $26.4 million. So this is very significant to this trade here. This is this option. These unusual options are just it's quite a large amount of money, and we think this is a large institutional investor that has this buying power to invest in Netflix And this is telling us that they are bullish on Netflix. Okay? And so if this video was helpful or you enjoyed watching it, please smash that like button. And if you are interested in other stocks where we analyze unusual options activity, we have more videos that are exclusive to members only. Click the join button on our channel and you can learn more on how to join because you want to diversify your portfolio with different stocks to reduce your risk and increase your chance of profitability. And so if you also want to see how we trade based on unusual options activity, we also have exclusive videos as well to show you our trades on how we do it, because we don't necessarily do the exact trades that these unusual options are, because they do require a lot more buying power sometimes. Like this one was, as we showed, one of these contracts required 4,400 just for one of these trades. So we do have different ways of setting up a trade that can also be very profitable and as well. So just click the join button to learn more on how to get access to these members only videos. Okay? All right. Take care, everybody. And as usual, have a wonderful weekend.